Hi, it's Paul from globaltradesoftware.com, and this is a tutorial video for our Elliott Wave indicator suite. And people keep asking me, how do you trade the third wave? How can you trade Elliott Wave on futures? So this hopefully will answer those questions. So this is 6E. So what I've tried to do is actually get a currencies futures contract. So also the euro US dollar would be behaving exactly the same way. So forex traders, this would be the same sort of thing. So this is a 30-minute time frame. Good, you can use it on 15-minute time frames. Really, if you want to use it on 5 minutes, you can. But really, you got to be looking for those bigger moves. So this is last week, and what I'm going to do first is just show you the setup on the waveform, the trading view version. Then I'm going to go to the think or swim version and show what happens as you get a longer fifth wave than a third wave and everything reprints. So first of all, on a 30-minute time frame, you're probably looking for one trade a week, and sometimes that might not happen. So what you've got to look for is wait for those trends to happen and wait for those pullbacks. And this is really one of those almost picture perfect type trends from last week, really. So Monday we moved down, we had formed a wave 1, we moved a wave 2 back up, we got a slightly sort of lower resistance level than that origin, and then we had a nice move down there on a wave 3, and it's this wave 4 pullback that's really important that goes into the end of the week there. So one of the things, the Elliott Wave indicator suite looks at all those other rules that I teach in those lessons and does it all for you. So in fact, what you're interested in is this wave 4. Okay, I'm just going to take the manager off there a second just to hide it. So this is pure exactly what we want to do. Okay, so it pulls back, and we form a wave 4. It pulls back into the amber zone, so that's an 80% probability it's going to go on and hit this fifth wave target zone. Okay, so this was Friday, pulls back up into there, and we're looking for that short. One of the biggest things we look at is this Elliott Wave oscillator here. This crowns between 90 and 140% here, and that's taken from the highest point on the wave 3 on the oscillator, and then during that wave 4 pullback it crowns and pulls back, doesn't even break the 140 and comes back down again. So we get the false break, they get the stochastic crossing over in the oversold. We do get one false breakout dot there, but that's not too much. The predominant ones are on the bottom there. The main thing is during that wave 4 we've crossed over in the oversold zone, overbought zone even, against that false breakout. We've got that measurement on the Elliott Wave oscillator. We've got the wave 4 finding resistance in there, and that is, that's our go, if you like. Now what happens is we've got a stop above the wave 4, and then our entry is breaking and closing below this 6-4 moving average low. Now you've got to look left. Look at this indecision doji here. Don't keep looking left, otherwise you'd never enter a trade. But look at this one here, this below that low here, or conservatively below this support here would be your entry. For me, I'd rather go aggressive because we're outside the 6-4 moving average high for this pivot point, so that would be my entry. Let's change that red for stop. And one of the biggest things that we look for is a risk to reward of over 1 to 1.6 to the fifth wave target zone. To do that, we're using a fib extension tool. We click on the stop, we click on the entry, we move it along, we click on the entry again, and we can see we're over 1 to 2 to that fifth wave target zone. So not only is the Elliott Wave oscillator stochastic good, the wave 4's pulled back into the amber zone, we're good to go. We use this 6-4 moving average low for the short entries here. That's below this recent pivot. That's our entry. Our stop is always above the wave 4. Our risk to reward is here. It happens that fast in your brain when you are looking for these. Okay, when you see all this happen, the software, the graphics and everything's there to help you. Yes, this is a good looking trade, and that's the move into the close on Friday. Really great looking trade. Now if you would have seen that momentum, I'm going to switch the manager back on now. When we're using the manager, I've got it on day trading moderate. We can see that this move down was higher than average volume into the close on Friday, and as we start to pull back up here on Friday, we get that sort of sideways action, and these blue dots underneath denote lower than average volume. So those you know, that have the manager would say, do you know what, this really could be carried over the weekend, and this is where we are right now with this trade. Now this software at this moment, because of where I've isolated it, is slightly different, because I've isolated right back at these highs here. I want to just go to the think or swim version in a minute, which isolates it just here, which is still okay. We get a 1, 2, 3, 4, but now because this is just about to go longer than this third wave, it will be reprinted a wave 3. And this is how you get in the third wave. You get in the high probability fifth wave, it blows through the target zone, which happens 20% of the time, and it turns into a wave 3. So this is getting very, very close to actually reprinting a third wave, and it's actually done it on the think or swim version right now, and I'm going to look at that in a minute. But one of the things we look for on the manager before we go through there is this bias cloud here on the 30-minute time frame. It's still red. We're going into the close on Friday here. We're lower than average volume, nothing to worry about. We then open up on Monday, higher than average volume move down. We get a move back up, the cloud is still red. We're getting higher than average volume down candles now. We're still in this trade. We've got a false breakout on the bottom. What we're looking for now is this to turn to a wave 3, get a wave 4 pullback, and then add some more on the way down if that continues. So let's just go over to the think or swim version and show you what that will look like. Okay, so now we have, it's printed the wave 3 now. So what we're looking for right now is two things. We've got the false breakout bars on the bottom. We know it's a very strong bearish trend. We're already in it. The manager, as you can see on the think or swim version, has kept us in this one. We've carried it over. We're coming down. We're on a wave 3. We can see the profile on the Elliott Wave oscillator is divergent. It's coming down. It's coming towards the center point. So one of the things we'd look at, we know at this moment in time this is the highest point, so we can actually draw that on and ready for our zone here. So we're going to go to the 0 point. We'll go over towards Tuesday. We're going to bring that on to here. I'm just going to then edit the properties. I only want 90, 140 on there. Click OK. So in effect, this is what we're looking for when a wave 4 does eventually happen. It will find resistance into one of these zones, and we'll look for a fifth wave. The stochastic's got to come up in the overbought zone against this false breakout dots on the bottom. The profile of this has to come in between 90 and 140. Right now, in theory, we're still in that trade from Friday. That was the fifth wave move here, and then we've come longer than the original third wave, so it's reprinting that third wave, and that will happen on TradingView very, very shortly. Again, we've used the manager to stay in this trade. It's on the day trading moderate. We know we had the big move down Friday. We know we went sideways into the close with lower than average volume. Lots of bearish momentum. The main trend for this at the moment is down. Carry it over because the manager's telling you to carry it over. We open up on Monday and it's going even further down. And now it's printed a wave 3. And that's how you get in a wave 3 on the Elliott Wave, using our indicator suite, by getting in that fifth wave because it's the highest probability move, and then it just plows through that target zone. Again, it happens 20% of the time, and then it reprints that wave 3 because it's going longer than that original third wave, and we're in a real big runner here. Thing to do with this is we use the manager now to manage it. If we get some bullish candles with higher than average volume, we just get out. allow the wave 4 to happen, let it find resistance, whichever zone we're in, the green, amber or red. Make sure we've got the Elliott Wave Oscillator between 90 and 140. The stochastics pull back. Once it starts to move back down again, use the same entry method that I just mentioned, because we can keep trading that trend. So hopefully this helps. Again, using Elliott Wave on a smaller time frame, on the 30-minute with futures, and this is how powerful it is. You've just got to be patient and wait for those pullbacks to happen and allow the indicator suite to identify them, help you understand how that wave 4 has behaved, and if it's behaved well according to our rules, trade the fifth wave.